Have you ever wondered when Tesla CEO Elon Musk will get around to buying back Tesla shares? Many investors had been on the edge of their seats ever since Musk sold Tesla shares. You probably would not want to miss this. It can be noted that Musk unloaded a decent chunk of his Tesla shares in April, ahead of a planned Twitter buyout. In addition to that, the Tesla CEO sold an additional 7,924,107 Tesla shares, worth roughly $6.9 billion in early August, according to regulatory filings. However, when a Twitter user asked Musk if he was done selling, he answered yes. In the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through, it is important to avoid an emergency sale of Tesla stock. That was in June. Tesla investors have since been hoping for the CEO to start buying back shares. It can be noted that most investors were concerned while others were bothered when Musk started selling Tesla shares in his pursuit of the Twitter deal. Many were quick to point out that Tesla no longer has Musk's undivided attention, which surely does not bid well for the company. On one hand, many are optimistic that once Tesla's investment rating has been upgraded, which is long overdue according to some, the EV company may perform well enough to propel Musk into buying back Tesla shares. In April, Tesla moved closer to the S&P Global's investment grade rating after reporting a strong first quarter with a solid financial balance sheet, especially in terms of free cash flow, while navigating tough macro conditions in the sector. S&P Global Ratings today said that Tesla Inc.'s first quarter results, ended March 31, 2022, indicated solid execution and prospects for robust free cash flow in 2022 amid supply disruptions, the organization wrote in a bulletin. During Tesla's Q1 2022 earnings call, CEO Elon Musk and other executives outlined the automaker's strongest performance in its short but storied history. Tesla posted over $18.7 billion in revenue, beating consensus estimates of $17.8 billion. It also beat EPS estimates of $2.27 by posting a nearly $1 beat at $3.22 per share. Perhaps the most impressive statistic of Tesla's quarterly breakdown on its shareholder deck was its ability to navigate through global supply chain issues and chip shortages, two issues that have plagued many industries, with automotive being amongst the hardest hit. Tesla said, "Challenges around supply chain have remained persistent, and our team has been navigating through them for over a year. In addition to chip shortages, recent COVID-19 outbreaks have been weighing on our supply chain and factory operations. Furthermore, prices of some raw materials have increased multiple-fold in recent months. The inflationary impact on our cost structure has contributed to adjustments in our product pricing, despite a continued focus on reducing our manufacturing costs where possible." Despite the challenges, Tesla's automotive division performed well above expectations by delivering 310,048 vehicles in Q1, a new company record. Its largest contributors to revenue generation were growth in vehicle deliveries, increased average selling price, and growth in other parts of Tesla's business. Its performance in Q1 has the S&P nearly ready to promote the company's stock to an investment grade rating. In October, the organization upgraded Tesla to a BB+ rating. But as the industry continues to expand, the company holds a competitive advantage. Tesla will have to improve one level from BB+ to BBB to be considered investment grade by the S&P Global's standards. At this stage, Tesla appears to be in a very strong position relative to its competitors to raise its cell capacity and complete the ramp-up of its production to meet demand. The S&P Global Ratings wrote, "Specifically, we believe the electric vehicle EV maker is on track to increase its annual vehicle deliveries toward our forecast of roughly 1.5 million over the next 12 months, which follows its delivery of 936,000 vehicles in 2021 and over 310,000 in the first quarter of 2022. While competition is increasing with numerous launches of new EV models, we recently increased our EV penetration to reach 15 to 25% of the global fleet by 2025, which should support Tesla's ability to increase sales of its vehicles." On the other hand, investors had been expecting Tesla to be upgraded out of junk status as soon as early next year, marking a credit marker milestone for a company that's risen to dominate the electric vehicle industry in less than 2 decades. The great news, though, such a boost may come sooner thanks to the company's steady stream of profits, according to Bloomberg Intelligence credit analyst Joel Levington. Tesla had nearly $19 billion in cash and short-term investments by the end of June, and Levington expects it to generate over $24 billion of additional free cash flow through next year. That would be more than General Motors Company and Ford Motor Company combined, and far more than Tesla's debt load. Tesla is still generating a huge amount of cash, said Levington. At some point, ratings companies will have to act, and I wouldn't be surprised to see an upgrade to investment grade happen before year-end. While this may not be important for the average investor and Tesla shareholders, it's a big deal for some large funds that often have a policy to not invest in companies that have anything less than an investment-grade rating, often referred to as blue chips. This has been preventing some large funds from investing in Tesla. This resulted in Tesla having a smaller percentage of its shares being held by large institutional investors compared to its peers with extremely large valuations like Apple and Amazon. The gap between Tesla's stock market value and its bond rating reflects how slowly S&P Global Ratings and Moody Investors Service are to upgrade relatively young companies such as Tesla, whose first cars were rolled out in 2008. Since 2020, its stock has rallied, and in October, Tesla became the first junk-rated company to have a market value of more than $1 trillion. It's currently the sixth most valued company globally, worth far more than higher-rated competitors like Toyota Motor Company and Mercedes-Benz Group AG, and has turned Chief Executive Officer Elon Musk into the world's richest person. Still, S&P and Moody's have steadily ratcheted up Tesla's grade. In October, S&P upgraded it to BB+, one step below investment grade. Moody's followed in January, boosting Tesla 2 steps to the same rank, citing improving profitability and business scale prospects. S&P head of North American auto sector ratings, Nishit Madlani, said that Tesla is likely to be bumped out of junk status this year because of solid execution, even in the face of supply chain bottlenecks. An upgrade is likely this year, Madlani said at the Autopalooza 5 virtual event organized by Bloomberg Intelligence on June 16th. An upgrade may well possibly provide a boost to Tesla shares, since some mutual funds are prohibited from investing in junk-rated companies. That may be one reason why Tesla has a smaller percentage of its stock held by institutional investors. Currently, many funds cannot own any equity where the debt is rated below investment grade, said Gary Black, managing partner at the Future Fund. He said an upgrade would give Tesla blue chip status. In Tesla's Q2 earnings report, the company reported second quarter profit that exceeded Wall Street's expectations and is boosting its capital spending plan over the next 2 years to increase production. S&P's Madlani has said he wants more clarity on what the company's profit margins will look like as it ramps up its manufacturing facilities and as commodity costs rise. The rating provider is also weighing Tesla's software-related business among other factors. We tie all that down to what does this mean for the company's market position, said Madlani. For Moody's, key considerations are whether Tesla can broaden its vehicle lineup and maintain its global competitive edge, according to Renee Lipsch, senior credit officer at the ratings company. There's certainly no indication why they would not be able to do so, he said at the Autopalooza event. For clarity, Moody's Investors Service, often referred to as Moody's, is the bond credit rating business of Moody's Corporation, representing the company's traditional line of business and its historical name. Moody's Investors Service provides international financial research on bonds issued by commercial and government entities. Likewise, S&P Global Ratings is an American credit ratings agency and a division of S&P Global that publishes financial research and analysis on stocks, bonds, and commodities. S&P is considered the largest of the big 3 credit rating agencies, which also include Moody's Investors Service and Fitch Ratings. Although saying that once Tesla has received its well-deserved investment-grade upgrade, it will prompt Tesla CEO Elon Musk to buy back Tesla shares is still quite a leap. Still, investors are optimistic that within the year, Musk will indeed buy back shares and they can all breathe a collective sigh of relief. Make sure to subscribe to this channel for more Tesla stock updates.